What's up guys, William Ryan here back with another video, and in this video I'm going to be talking about ICT's dollar index prediction that he mentioned in his latest live stream on YouTube. And if you haven't checked those out, I would highly recommend you do. They're very informative, lots of good information over there. And so I am actually in fact in agreement with ICT on his predictions on dollar moving higher, potentially headed towards 115 and maybe even more. And so the reason being is because we have this consolidation here, right? And we know that when price begins to contract, right, we know that big candles are going to come shortly after, right? Because the market can only have 4 stages of delivery, which we know is consolidation, expansion, reversal, and retracement. And typically from the from the consolidation type of delivery, what comes after the consolidation would be an expansion. And so looking at this dollar index monthly chart, we have a pretty big size consolidation, right? And when price begins to expand, I think we're going to be expanding higher in agreement with ICT towards this buy side liquidity pool here and this one residing right here, right? So prices come down into this fair value gap, right? Took out some sell side, we moved back into the range. Price came back down to the gap, and now we have closed above this Sibian here, right? So this now becomes a balanced price range, and this really influences our bias moving forward because this area is now balanced, right? We're very, very close to this high, and I would reasonably expect price to move higher. Although we do have optimal advanced signatures here to go short, right? We've already traded up very, very high into this price range, right? And also traded through this area here. Okay, so this kind of negates this optimal advanced setup for me personally at this point. And I truly do believe that we're going to be targeting the buy side liquidity here, the remainder of this gap, and even this buy side liquidity over here. Dropping right down into the daily chart, guys. Okay, we can see that we have optimal advanced signatures on a daily chart, right? And this gets me very, very excited because this typically only happens every 4 to 6 months, right? Especially something this clean, right? So we have the willing percent R making a lower low, right? At the same time, the dollar index is trading into the balanced price range within the order block here, the fair value gap, and also that weekly and monthly balanced price range that we just looked at, right? So if you guys have not been following along on this channel, we target internal range setups, right? Looking for external range liquidity. And so we use the willing percent R here, okay? We apply the SMT concept that ICT teaches us, and we apply it to the willing percent R. So when the willing percent R takes out this low, at the same time we're coming into, right, the PD arrays that I just mentioned, we can reasonably expect a low resistance liquidity run higher, right? And for this low to stay intact and to not get taken out, right? And if this low does get taken out, guys, my bullish bias will be off the table, and I do think we'll be targeting the lows down here at this low and these equal lows residing right here as well, right? So until, if and when that happens, I'm still very, very bullish, expecting this optimal advanced setup to pan out, targeting the buy side liquidity residing over here, and the remainder of the fair value gap that we have on the weekly and monthly charts residing up here. All right, guys, so this is what I'm expecting for dollar. Please keep an eye on the dollar going forward, right? The things that I mentioned. If we do trade below this balanced price range and close below the mean threshold of this total range, this order block, then I do think we're going to be taking out this low. And the reason why I say that is because in low resistance liquidity runs, we don't want to be trading deep into the range, right? Just like I negated the monthly optimal advanced setup with the SMT on the willing percent R, right? It's because it traded very, very deep into this range, right? From range high to range low, and we traded through that very, very essential fair value gap. We closed above it, right? So although we were getting SMT characteristics on the willing percent R, I've negated that idea right? Because of how high we've traded up into the range and because we've also closed above that fair value gap, right? So we want to see large, big candles leaving this area. We don't want to see it really hang around in here. We want to see price begin to expand with speed and magnitude towards the highs and also the fair value gap. Okay, one last thing, guys, before we move on to the bond yield is I just want to go over the power of three here, right? So there are two types of power of three that we typically look for, right? And so the internal range power of three, right? We look for consolidation, retracement, expansion, right? So that's the internal range power of three that we want to hunt. And we so far have a very, very nice internal range power of three forming here, right? Very, very beautiful blocky consolidation. We ripped down into the PD arrays that we were looking for with the William percent R characteristics. And now we're looking for price to immediately run away from this area, okay, with speed and magnitude. The longer it hangs around in here, okay, the less likely our trade idea is going to pan out. And so we really want to see price move away from this area very, very quickly. Okay, we don't want to see price hang around in here, right? The faster it moves away from here, the better. And that would indicate to us a very low resistance liquidity run coming this month and possibly into next as well. Okay, so moving right along into the bond yield, and this also aids in our analysis, guys. This is very, very important that you guys continually check these markets, especially in the market environment that we have right now and the state of the world. Okay, it's very, very important that we take a peek at all market assets, right, to give us a better overall understanding of what's really going on in the marketplace. So what I'm expecting here this is the 5-year bond yield. All of the bond yields are relatively the same in terms of price action at this point. And so that's why I'm only going to be covering the 5-year. If you guys want to check the 10-year and 30-year for yourselves, you can go ahead and do that. But so here we have optimal advanced signatures on this monthly chart. I'm just going to map this out very, very quickly. Right, so we have a lower low here forming on the William percent R. At the same time, okay, price is trading down into a discount market. We're trading into this balanced price range on the sell side of the curve, right? We have an order block here, okay? These two down close candles, that's the order block. We have a fair value gap / balanced price range in here with these wicks. Okay, price has now traded higher. We've rejected from the discount. And same thing with dollar. We've traded above this balanced price range. Okay, so this fair value gap in here, we have closed above it, and now we have traded back into it, right? And so we really don't want to see this low get traded to again, guys. We want to see continued big bullish candles for the equal highs resting above here. And if we want to get over exaggerated, we have a lot of buy side liquidity resting above these equal highs over here. Okay, there's a lot of liquidity resting over here. This is my longer term target. But like I said, again, that all changes if we take out this low, right? And if we do take out this low and fail to move higher, I would reasonably anticipate these lows getting tagged, this one here, and then us trading back into this balanced price range, right? But until that happens, guys, I'm very, very bullish on the bond yields and on dollar. And last but not least, we're just going to drop down into this daily chart. Okay, this is a very, very beautiful chart as well. So again, guys, this is the monthly balanced price range that we just took a look at. Okay. Just going to get rid of some of these lines and boxes here, just so it looks a little bit better. Right, so the same thing that's happened on dollar. Okay, we're relatively getting the same fractal here on the bond yields. So price is trading into a discount market. Right, at the same time, we're taking out this low on the William percent R, indicating a change in state of delivery. okay, for external range buy side liquidity, right? And again, we're getting that power of three internal range, power of three signature that we like to see. We have consolidation, retracement, and then now we're looking for that low resistance liquidity run expansion higher, right? So again, what totally negates this bullish idea, I don't want to see price close below this BISI, right? Really don't want to see that. I would like to see this propulsion candle, propulsion block, and balanced price range hold price, and us ultimately see big, bulky, beefy candles for the residing buy side here. All right, guys, so we have some fractals here that we really want to pay close attention to. And moving forward over the next couple weeks, I'm going to be back uploading videos, probably a lot of execution videos with commentaries. I think that would be very, very helpful for the community. I know some of you guys have been DMing me, telling me that you guys have been struggling a little bit with this setup. And so I'm hoping to bring some content that's going to bring some clarity to the setup and to help you guys out a little bit. And so with that being said, guys, thanks for tuning in. And until next time, good luck and good trading.